Morning, Steve Free in Chicago with the morning grain comments. Overnight prices are a little bit better. This kind of on again, off again market trade continues to have mostly a consolidated trade. In the beans, we're trading below the $9 psychological area. $8.91 is a pretty important level of support. The talk is that basically for the bean market, you've got crush rates doing very well. I think ownership, though, is also really good here in the United States. You know, if much stronger Chinese purchases fail to materialize and the South American weather concerns abate, a shift to a more bearish focus could be possible when the government report returns suggesting downside risk from current levels. Over in the corn market, we've seen a lower basis. The market in futures is trying to bounce off the 371 low. I think that in corn, the partial shutdown is eliminating a lot of news for the corn market, and you're kind of wondering if lower crops in South America will provide some support, but the downside risk continues to be from low ethanol production. And what if U.S. farmers add acres in 2019, and what if South America weather does turn around? The corn market, though, probably is going to stay in this trading range until we know more about 2019 supply. And in the wheat, near-term futures maybe focus on more of a sideways trade. The potential for surprising low U.S. acres could meet with resistance of disappointing export prospects. We did see where the Russian ag minister on Wednesday said they're not discussing imposing any limit on grain exports, so that could offer some resistance also into the wheat market. Chinese Vice Premier is coming in January 30 and 31st. We continue to hear talk about maybe a $50 billion two-year deal to buy U.S. ag products. We'll see if that's announced. And on the other side of the coin, a bipartisan group of U.S. lawmakers yesterday introduced a bill on Wednesday that would ban the sale of U.S. microchips and other components to this technology company in China for maybe stealing U.S. property results. So anyway, there's a lot of stuff out there in which we don't have export sales, we don't have the USDA January report. Yesterday, as I was at a meeting with a bunch of farmers in Central Illinois, good turnout. You know, the number one question that they have is on marketing and how to market, especially markets where prices are below break even. They want to know how much China is, if there is a deal in China, how much the market would react to that from a price standpoint. They also want to know how competitive Brazil and the Black Sea is in the future for their export demand. And they also wanted to know about price discovery in the grains. Is it changing because of the algorithm traders? As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.